There we go, recorded cloud. Well, welcome everyone to the super easy trade room tonight. It's kind of not a trade room. What we're going to be going over is specifically the six-figure challenge. So I'm going to try to hit as many questions as we can in one perfect setting to hopefully create one perfect video, although I am not a video editor, so we'll see how this goes. Having said that, so everyone knows that we've been talking for months about the six-figure challenge. So what I first want to discuss is what the six-figure challenge is not. It is not by any means safe trading. I'm going to mute everyone real quick. You guys can unmute if you have questions. But here's the deal. Safe trading would be, 3 to 5% per trade. If your accuracy is really good, safe trading would even be up to 10% per trade. I'm going to go very moderate, but we're still going to be doubling, the high levels of safe trading. So we're going to be going for about 20% per trade. So what this challenge is not is your everyday trade account, your proper risk management account, your wise levels of trading. What this challenge is about taking a small amount of money and turning into large amounts of money in reasonable amounts of time. So there are several people who can turn an account to $1 million a couple times a year. There are some people who can turn an account into six figures a couple times a year. Now you have to remember that they might have lost for a month and they blew that account. So again, what this challenge is not safe trading. So it is not by any means considered safe trading, and you guys need to know that. What it is a chance for you to make insane amounts of money in a very short amount of time. You have to know that if you cannot afford to blow an account, please do not do the high levels of risk. So you're still more than welcome to participate in the challenge, but only do it with like a 5%, maybe even 7% risk. In order to find out that risk, you would be either using an indicator on MT4. You'd be using something along the lines of my FX book, STNU, which is STNU. It's a free app for your iPhone. There are many websites, and even my little worksheet that I created there has a small little calculator on the side, or you would just type in the percentage to find out what your lot size is. So you have a multitude of tools available to find out what your risk is and make sure you are, using that specific amount of risk. So this challenge is for those who can afford to blow a $100 account a couple of times with the idea that you will be able to make 6 or 7 figures within the next few months. So we make no guarantees. There are no promises. This is trading. It is Forex. It's high risk. Do not trade what you cannot afford to lose. I am not your financial advisor. What you also should know is you can still take the trades, obviously, and you can try to do it slow to see how it goes. You can take the same signals, but only do 5%. Let's see, cover that. You can, for the people who are concerned, like, okay, well, I don't have the money right now, or what if I do withdraw? Here's the deal. I have committed to doing this through the end of the year for sure. It doesn't mean I might not take a few days off. If we have a really rough week, I typically do that. I'll just say, okay, I'm backing off for a day, and that's totally normal. Most professionals do that. But in general, I'm going to stick with this through the end of the year. I don't trade major U.S. holidays. I don't trade a whole bunch of U.S. pairs around U.S. holidays either. But just so you know, you can withdraw at any time. In fact, I highly, highly recommend, if you have $20,000 in debt and your account gets to $20,000, please, please, please make the right decision and withdraw that $20,000. Okay, because you can start again with that 300, 400-ish, or leave a few hundred in there, but withdraw the $20,000. Pay off that debt, and now your life is stress-free no matter what happens after that. If you need $70,000 for your mother's health insurance, or for to pay off the rest of your mortgage or your student loans in your car, and we hit that level, please be wise enough to withdraw that $70,000. Yeah, once you're making that kind of money, I would suggest leave like $1,000 in there, maybe 500 to 1,000, because it's a lot easier to grow once you're at that level than it is to grow at 100. But either way, please be wise and withdraw that money when you hit whatever milestone is important for your life, okay? And yes, you will have a chance to continue. There will be new people joining super easy. So we will you'll be able to use the same worksheet and plug and play with the numbers. You will know your own lot size, okay? So you'll be able to go in there and figure out what percentage of risk that you're doing, what percentage of growth you're going for, and to know your lot size. So even if you withdrew before somebody else, or if I withdrew and I was starting with a smaller amount, some of you guys still had 50,000 in there, but I withdrew my 40,000, so I do not. We can still continue to take the same signals, same trades, but we're all at different levels in the journey. same road, different, paths, if you will, however you say that. I just messed that up pretty bad. So what you need first and foremost is a high leverage broker, okay? Catherine, yes, only 100 participants are allowed because this is a paid for Zoom membership. So if somebody else has a Zoom membership, they can pop on in, but otherwise they're gonna have to jump on the recording, and then I will be upgrading this plan. It does cost to do so, but either way, yep, only 100 participants is the max. So let's see. What you're going to need to make this challenge happen is you need a high leverage broker, preferably 1,000 to 1 or above. I would even say 2,000 to 1 is going to be your best bet, because in this challenge, we already have an X amount of percentage of a chance of being wrong in our trade, which is part of real life. It happens every day. It is what it is. But when you do challenges like this, you have X amount of percentage of being wrong. So let's just say it's 10% chance if my accuracy is in and around 90%, right? But now you have whole nother factor kind of put on there. You have a huge chance of blowing your account just based off of margin calls alone. So when you're trying to do this challenge with a smaller leverage broker, such as 500 to 1, Jamie, I hear you, you're running the risk of really blowing the account. So you can use Hugo's Way at 500 to 1, but here's the catch. You're gonna have to either use double the amount of money and less risk, or half the amount of risk for this, in terms of how you're compounding. What you should also know is most brokers, even if they start at 2,000 or 1,000, as you gain, so as you hit 5,000 and 10,000 and 25,000, every broker has different rules. They say they're consistent. I have not found that to be the case, but every broker does inevitably at some point lower your leverage as your account size gets very, very large. So you're going to end up with in and around 500 to 1 anyways. But typically you're not going to hit that mark until you're above 50,000 or 100,000 in some cases. And I don't want to give you an exact number because I have seen different scenarios with the same broker time and time again. So I don't want to be inaccurate in my information. So first and foremost, you need a reliable broker. I love Hugo's Way. If you're using Hugo's Way, you can use them. Just know you will either need double the amount of money or half of the amount of risk. What you're also going to need is good management. So like when we give you a signal, it's going to have a take profit, a stop loss, and an entry. So in order to manage your trade, you guys know that no matter what's going on in my life, to the best of my ability, I'm still human. I always, always, always move my stop into profit. You guys are going to need to be able to do the same thing. So don't be fussing when I say, hey, well, the majority of us closed out in profit. It didn't hit our full 60 pips, but we got some out of it, right? And yours turned around and hit stop loss. Your management is key, because even if I can find you the world's best trades, if you did not manage it accurately, we can't go any further. So just so you know, you're going to need to be kind of very attention to detail. So for instance, if I gave you a signal for right here, okay, as a buy, and you come take, well, let's say right here, as a buy, you come take a look and see that it hasn't moved its full amount of pips, you know that either you can tell by chart analysis and you can tell by your own attention to detail that there is time to enter this trade or there's not time to enter this trade. You need to be able to know that information independently on your own. So you're going to need your Telegram name, your Zoom name, your free conference call name, all the same as your actual registered name on Super Easy's website. So whatever your registered name is needs to be consistent, because Pat's going to be monitoring it. I'm not sure if he's hiring somebody to monitor the group or how he's going to do it, but he will be monitoring the group to see the paid members are in there, etc., so forth. So make sure your names are the same. There will be people who maybe monitor the Zoom calls and free conference calls as well. Again, I'm not an expert on what he's going to do, but you do need to have that done. And let's see. I took some notes and I'm trying to write all the questions down. So in terms of how much you start with, that is 1,000% personal preference. Somebody said, why don't we just start with $25 and see what we can do? Which in theory, like having a challenge for that sounds really nice and sounds kind of fun and kind of exciting for me, because I know that I can blow a few $25 accounts, but I can also turn a $25 account into $5 grand. So, but I know that. But I also have the mental and emotional stamina to be able to handle the loss of that $25 account. So you need to be mindful that I would say at least start with 50 in terms of how much you're starting with. But when we plug a number into our compounding worksheet, we're going to want to plug half of the actual amount we're starting with into that worksheet. So for example, If we put $200 into our trading account, when we plug a number into that compounding worksheet, we're going to plug the number 100 into that kind of, into that column, so we know exactly what's going on. Other than that, I think that kind of answers most questions. Just know that if you're, so somebody who's starting with less is going to go a little bit slower. Somebody starting with more is going to go a little bit faster. I will also say, please don't start with $1,000. Just don't do it, because this is already going to be new. It's going to be a lot of pressure, a lot of people, a lot of questions. Like, start with maybe 200 at the most. Don't put all your eggs in one basket. If you have an extra $1,000, for example, then you can easily start to put that in 5 separate accounts. So if one gets blown, you're ready to go. You can trade your own account as a second account. You can have like a savings account method where you only trade the day chart as another account. Like, so you have tons of options. But don't put all your eggs in one basket, especially the basket that's exposed to the most variables. And this is going to be exposed to the most variables. So I think that that kind of answers everything. I will be going live on Tuesdays and Thursday mornings, probably earlier than 9 a.m., but 9 a.m. for sure at the latest. I will be kind of just clicking through. We'll put some music on. You know, Dorian's going to tell me about this trip in Spain. It's going to be a lot of fun. So-and-so is going to mention stuff in life, and we're just going to kind of bond and hang out. And that's the whole concept of this trade room, is not just, it's going to be analyzing charts, but hopefully somebody else will share their screen, you know, and say, hey, this is what I'm seeing. Hey, this is what we're all seeing. And when we're analyzing these, we're going to try to pick a trade or two. In terms of how many trades to be in at one time, you have to know that your account really can't handle more than 2 to 3 trades. And you have to understand your marginal level of percentage available. So the level you have available, let's see. Sorry, Pat is messaging me here. Let me pause this recording if it will let me. Pause back to resume recording. So in terms of how many trades you can take at one time, I mean, that's a really good question. And it really comes down to, first off, again, knowing and understanding trading. So here's the deal. It's only going to be as effective as your ability to comprehend and to know trading. I will say you should not be in more than 2 trades at one time. And you definitely should not be in that second one if your first one's profit is not already covered. And what I mean by that is you've moved your stop into profit. So you shouldn't even be in the second trade, and for sure the third. So I'm going to try to be consistent in terms of how I call the trades and in terms of how we kind of figure stop loss and take profit. But what you need to know is this is high risk. So you need this trade to close in entirety, which means one day we might be able to catch 2 or 3 moves because it's going to happen so quick like this. It can happen, not a lot, but it will happen. And then other days we might just look and say, none of this really looks right. We've got some news coming out. We don't want to play with this. We don't want the drama, so we're going to skip it. And that's all personal preference. You guys have to know that's real. Somebody had asked how many signals we're going to be giving per week. And here's the deal. We can't, and I've talked to Pat about this as well, we can't and we shouldn't promise X amount of trades. And here's the reason why. Sometimes if the markets are just being crazy or there's too much volatility, it's not really wise to say, hey, you're going to get 10 or 15 trades this week, because it's very unlikely. My guesstimate is going to be you're going to get at least 7 to 20 trades if I had to guess. Elvis tends to call a whole bunch of trades. Pat usually does anywhere from 2 to 4. I will probably do anywhere from 2 to 4, and that's it. It won't take much more than that to hit 6 figures. So again, with good levels of accuracy, guys, it only takes 30 to 40 trades to hit 6, 7 figures, depending on what your account starting balance was and your percent you're going for per trade is. So it doesn't take very much. And at 5, 6 trades a week, how many weeks is that? You guys can do the math. Literally, it's possible that you guys all hit 6 figures in the next 5 weeks. It's not like just a pipe dream. It definitely has been done, can be done, and I know how to do it. It's just a matter of kind of being patient. The last thing I'll say as part of this recording is we've got to keep the atmosphere really good. So it's what I learned most from coming with Pat, like I talked about very mildly when we first started this, when Dorian was kind of open about his personal stuff. I was doing really well in trading prior to Super Easy, but my results went from pretty well to out of this world with Super Easy, because I learned a whole bunch about like that really fragile heart of mine and that ability to kind of control my emotions. So having said that, what you guys need to know is keeping a good atmosphere, keeping it to where we are, being positive. It's stressful to be in drawdown, especially when you're pretty much, your risk is blowing the account most of the time. To be in drawdown means you're risking blowing your account. It's not an easy feeling, but we can't freak out on each other. You guys cannot freak out on me. If you're gonna do that, just don't join the challenge. And we're gonna do the best we can. So make sure you're keeping it positive. And here's the other thing, you cannot be asking questions about these trades in the public group. So any trades that are related to this challenge do not go in the regular Super Easy channel. So because then obviously that would be a breach of kind of keeping it separate. So I think that about answers everything I can think of. Let's see, signals by Pat, Jenny, and Elvis, that's correct. I do not do scalp. I will not post scalping trades because here's the deal. If you miss it by a few minutes, you might have missed it altogether. I mean, I would love to, and I do have a 10 pip strategy that works pretty well. I mean, I have a couple 10 pip strategies that combined work real well, but that's like real time. And if you missed that signal, if you're at work, you can't possibly be able to kind of do the challenge. So yeah, Jamie, you were doing really good with one of them. I know you were compounding pretty high. I know you were. See, I do know that. I've even got a new one since then too, and it's fire. But anyways, we should be concerned about the skill set, not the money. The money is the iceberg, yes. It's mostly about like, watch how I analyze trades. I am not a perfect person. I'm not gonna call myself a guru because I am not. I still make mistakes. And sometimes when I go back and look at my trades, the majority of losses are stupid. They're not because the market was against me or the market makers were against me. They're typically because I was wrong, not because of someone else or something else. So I think that about covers everything. So does it mean six figures? Yes, we're looking to get to over $100,000. I was going to say $1 million, and we had talked about it, but $1 million has a lot of it just honestly. So I personally have done this challenge quite a few times, and I play with it all the time. So I'll play with like, I make a few bucks from those affiliate credits, like between 8 and 11 in the month. Like I don't make a very whole bunch. So right now I think I have $12 in my AAFX with hundreds of referrals. 12 bucks is how much I've earned. So like I'll transfer that to an account and I'll just play with it. And I have a lot of fun. But what I've learned is, at least for me, and you guys might have a different psychological level, I realize that my psychological level for some reason is in and around that $300,000 range. In terms of these challenges, that's usually when I tend to lose it. I don't know if it's mental, I don't know if it's emotional, but it's too frequent to be a coincidence. So since I know that, and most of you guys have never seen six figures in a year, or at least not in a few months, six figures is a good point because trying to get beyond that is a lot. So six figures is good, and if you withdraw that the first time, great, then do it again. But don't just leave, $300,000 in there, because for some reason, when I do this challenge and I get to that $300,000 level, most of the time I've blown it too often. Like, I don't know what happens at that point, if it's mental, emotional, but that's usually when I make the biggest mistake, if I'm being honest. So take the money when you need the money, okay? If 200,000 is what you need to buy a house, take it. If you can risk it and your bills are paid, you're good in life, you don't worry about anything, then go for the gold. But if you still have some debt, you need to buy a house, or you have other things, I would suggest withdrawing at that 200, that 300,000. And obviously there's a huge tax issue too as you get higher and higher. So Robert said if he gets 20K, he's withdrawing it. Good, thank you. Please do that and then tell everybody in the group that you did that, please. So Timothy, you have a question. I'm gonna go ahead and unmute you. Okay, if it will let me. Oh, I don't know why it's not letting me. Timothy, if you unmute you can talk. If we have 3 or so brokers and the accounts get really large. Don't hedge, no. Whatever your name is, please make sure your name on Zoom is correct because you're gonna need that correct. But whatever your name is, please don't hedge. Don't hedge and don't try to stack these trades in 5 accounts because I don't know everything, but I do know my mama taught me that we don't put all of our eggs in one basket. And even if we have 7 different broker accounts, but we stack the same trade in each broker account, we're essentially just putting it all in the same basket. So it could be 6 baskets all in one big basket, but we're still putting all of our stuff in one big basket. So if anything goes wrong with that trade, if GBP has something come up or Trump decides to tweet again or Mexico has another, you know, what is that, cartel war? Anything can happen, and we do wrong, all of your accounts are blown versus one. So I can't stress enough that even when I have done this, I usually stack a couple of accounts ready to go, and then I just hit it hard. I look for a few trades, I'll go work out, I'll do some chores, cook something, or try to find something else to do, get away from my charts, and with all due respect, my messages, just to kind of clear my head and be present that whole breakout period, like that book, The 12-Week Work Year. It's a great book. If you haven't read it, you should totally read it. That breakout period in the day is important. So if you can withdraw $100,000, you should totally withdraw $100,000. No, DJ, listen. That's the problem, is that was what kicks in. When you're at $100,000, that is when you should withdraw. If that is the life-changing amount of money for you, just withdraw. In fact, the first or second time I do this, I probably won't bring my account anywhere near up and above $100,000, because I want you guys to, I want to be a good steward and I want to be a good leader. I want to teach you guys that, hey, for most of you, this will replace your annual income for a year. And if it doesn't do that, it will at least pay off your debts or help you kind of be pretty stable for a few years. I mean, rent even here, $70,000 would make it to where you could pretty much live effortlessly for close to 2 years. I mean, not well, not, you know, hitting it up and all, but you could survive for 2 years off of just that amount of money with no stress in the world. So, yes. Yes, Robert, you can totally have my back, okay? But that's with 50-day, I can with Chrome. See, there you go. Anybody who has any questions, go ahead. Can you guys unmute yourself by chance? Anybody at all? I don't know.
Hi, Jenny.
Hey, Kumar, how's it going?
I'm good. Thanks, Jenny. Sorry, some other person was trying to speak before me, I guess. Sorry for that.
Yeah, no problem.
Okay. All right. I just have a question. I think someone posted the question in the chat room as well. How do we? I mean, once the trade comes into profit, so will we be notified about that to be moving it to the profit, or it's left to us to move it to the profit?
That's a really wise question, and thank you for that question. Here's the deal. I'm not going to commit to that, and I'm not going to ask Pat or Elvis to commit to that either, and here's why. You got to realize how much is going to be in there already. I mean, so there's going to be so much noise, and we have to keep the noise to a minimum. This way, when an alert goes off on that channel, you're taking it seriously. It's important to you. So if it gets too noisy, now you're going to be missing 1,000 things. So you have to be able to take the initiative on your own to be able to see. So whatever your schedule looks like, if we call that trade in New York, you know to check it after work, and you know to check it before you go to bed to move the stop loss up or to close it, or whatever your management tactics are going to be. I have a huge list of rules posted in the group. They're a great starting point to figure out how to do that. But you always want to protect your profits, always, no matter what. This is high risk trading, guys. So once you're in profit, you protect that. Worst case, you get out with 2 or 3 pips and then you just jump in the next trade. My best guess is we're going to have too many trades. So don't worry about, oh no, well, if I don't get the full 50 pips on this, I'm going to be behind by 1 trade and then everyone's going to be ahead of me. Don't do that. Instead, be like, okay, cool. So I closed out with a 20% risk, baby. I got a couple pips. I can take the next one safely. Please realize that the last thing you want in this challenge is for something to hit your stop loss. This is not your everyday trading where we're trusting our stop loss and we're trading with your risk. Very not good risk management. So you have to know that your job is to manage this trade, and no one can do that for you but you. Okay.
Yeah, thanks for that, Jenny. Other question. Sorry. Yeah, and yeah, it makes sense because we just need around 20 pips per trade just to reach around 30 to 40 trades, and then yeah, we are all done with the target. So yeah, it makes absolute sense.
You'll have the option to let this run. So some of them might be a runner because I'm going to be calling trades on the 1 hour and the 4 hour, and you'll have the option to let that trade run until you get another signal that matches your rules. So that is something I did not say, and I should have said that. I don't care if it's me, Elvis, or Pat. If a signal is given and you can't see why, do not take that trade. So if a signal is given, here, I'm going to move this. I'm sorry there. If a signal is given right here, let's just say here, to buy, okay? And it doesn't match your rules, and you can't see why, you need, and your personal responsibility to your own person is to skip this trade, okay? When you're given a signal, I don't care who it's from. I don't care if it's from a multi-millionaire, I don't care if they drive a Lamborghini and they flash it, or they can show you that they can donate hundreds of thousands of dollars. Or my personal goal is to live off 10% of everything I make. Like, that's my milestone. That's what I'm going to quit. But either way, I don't care how fancy or flashy they are, how perfect you think they are. The thing is you don't take the signal anybody calls if it does not match your rules for trading. So you should have rules, and if it doesn't line up with your rules for entry, you're going to skip that trade. Also, you move your stop loss up. I'm sure there's going to be plenty of signals that you're going to be able to jump into another signal. Anyone that kind of closed out with just a couple of pips, don't freak out about it. It's okay, because you'll just trade at whatever lot size is closest to your account balance. And I'll explain that on the compounding worksheet video I'm going to do. Okay, we'll do that tomorrow night. Okay. Does that answer your question, Kumar?
Yes, Jenny, thank you.
You're welcome.
I have other question is that regarding the chat, the Telegram chat, are the posts only allowed for you, Pat, and Elvis? Because if there are a lot of discussions going on into that chat, there are chances of us missing out the signals.
And that's a good point. I do believe we're going to have it only as a notification channel only. Therefore, there will be no chats allowed.
Okay, and if we have any questions about it, we need to chat with you personally, isn't it?
Yeah, but if you're going to ask about a signal, ready? Here's your job. If it matches your rules, you should take it. If it does not match your rules, you should not take it. Very,
Okay.
very simple.
Yep, clear.
Okay.
Thanks for that.
You are welcome. Our next question. Jamie, is that you talking?
Yeah, it was. I was going to say that, yeah, your strategies and everything works, guys. Just make sure you're learning the skill set, because the money is going to come. All right. If you start thinking about the money, you're going to be distracted by the money, and you lose it, and you get hit in the throat, and you go down to that one knee, and you just don't want to get back up. You're not going to get back up. So, I mean, I lost 12K, like, just like that. So, I mean, guys, look, and I broke my rules. I traded at work, got distracted, didn't put a stop loss in. Whew, Lord have mercy. I just sat there and looked at my phone the rest of the day. I mean, it was bad, but I mean, you knock it off. But see, the thing is, I didn't lose 12K of my money. I only lost $150 in my money because I started the account with $200. So if you look at it, you're using other people's money. So look at it like that. It's all about the mental. So, I mean, just make sure, you stick to your rules. You try your best not to trade at work because you're going to get distracted. And make sure you put your stop loss in. Protect your account at all times. It's like they say in boxing. Protect yourself at all times, because once you drop it, you don't hear that bell, that guy clock you, that's it. So I just want to put my 2 cents into it.
No, thank you, Jamie. I super appreciate you. That's awesome. And that's a good way to think about it, guys. That's what investors do. That's what I do with my houses. I buy houses and I rent them out, and I'm using somebody else's money to build my retirement, to build up my children's future. Somebody else is paying that rent. And I keep my rents really low, and I have great, amazing tenants. But that's all we're doing is, once you get past that $100 level, that $200 level, yeah, so fine, you blew a $50,000 account. It's painful. It's very painful. But I tell you what, it wasn't your $50,000. That's borrowed money. Well, it's not even borrowed money. That's earned money. So it's not going to kill you if we blow some money. In the worst case, if we're all being honest, we've all wasted $100 on Starbucks, or the shoes we thought we needed, an extra pair of black high heels, or the Michael Kors purse, or a video game, or a new car toy for the boys, or who knows, I don't know, a paddleboard in a boat, I want a boat, but anyways, like we've all wasted money before. So $100 is not going to kill most of us. If it is gonna break your bank, please don't trade so high risk, because your chances of blowing $100 are high here. So that's the purpose of this, is to go hard or go home. So, all right, next question.
Hey, Jenny, how you doing? This is Brian.
Hey, Brian, how are you?
I'm doing good. I'm doing good. My question is, say if you get to $200,000-300,000, right, and you go to withdraw your money, do you pay your taxes right then instantly, or do you pay it at the regular time of the year?
So I am not a tax advisor. Anything I say can and will only be used for education purposes. Here's the deal. When you withdraw anything more than $10,000, your accounts are automatically flagged by the IRS. Any transaction in most banks around the US are flagged at 10K, so you know. Having said that, there are typically fees when you withdraw, especially when you get into bigger money. So you withdraw, for instance, $18,000, and then you see $1,000 fee, you're like, oh, whoa, that's a lot. Like, so when we're transferring money from one source to another source to another source just to get it back to our bank, you need to know that there are going to be fees. In terms of when and how you get flagged for taxes, it depends on how you claim your taxes. But here's the deal. How do I say this? You will have to pay taxes the first year, but by the second year, so for instance, if you withdraw this year $100,000, by the second year, you really should be filing quarterly. If you're smart enough to kind of incorporate or put it as a book, it's very smart. So,
right.
Yeah. Helen said withdraw 9K at a time, which is something I typically do. So like I've got a pretty good system down on my main trading account. Again, it's not super high risk unless I'm just plain having fun with it. But I usually withdraw just a few K every week, and then that's it. And I'll just kind of play with it. So, Robert, I wouldn't mind you walking me through the BitPay thing, because I have an account and I have a code and I have all of that, but I still don't have it working, like for reals. So, I mean, I don't know if I just need to delete that whole account and start from fresh, but that thing never worked for me, and it seems a little bit sketchy how I could have that amount of money in there and then not be able to access it just because something happened. So that's kind of awful. But I promise you guys, if this guy from Louisiana helps me figure it out, we will do a call and I'll have him jump on and we'll kind of we'll walk you through it together. Because yes, BitPay is an option that a lot of people do use. I don't know enough about it to be super in love with it or to criticize it fairly. I just know that once I get locked out, it's a pain in the butt. Like, it's a big pain in the butt to get back in. And then since they don't have a wallet like Coinbase, Coinbase is backed up everywhere. So if you have the money, you have the money. If you lose your money in BitPay, you lose your money. There's no evidence of that. Like, it's, I don't know everything, but I know it's kind of weird. So I love PayPal though, Cove or whatever. So, and PayPal is no joke with their taxes either. They report everything. Everything's reported nowadays. So, all right, next question. Next question in terms of the challenge. Anything else at all?
Hi, Jenny.
Hey, David, right?
Yeah, David.
All right.
I'm just wondering. I know you say that as soon as you go into profit, move your stop loss into profit. But I wonder if you can give some kind of guidelines, because as soon as if you move it too soon, then it's gonna get taken out. So what would you recommend? I mean, I know it depends on which pair as well, but can you give us some kind of rough idea?
Okay, well, since this is recorded, I'm going to try to do a very quick, breakdown. Here's the deal. Every broker has different spreads. Every broker has different fees. So even in the challenge, nothing is going to come out dollar for dollar, because that spreadsheet is based off of USD pairs. So now that I've said all that, I'm going to say this, which is every broker, again, has different spreads. So on a higher spread broker, such as AAFX, you have to be mindful that if that spread widens at all, you're going to be knocked out very easily. So you're right. And because some pairs only move like 30 pips a day, and some pairs move 200 pips a day, there is no concrete answer. And I really wish I could give you one, but I can't. Here's what I can give you. If you're not at work and you're not on a special romantic date with your spouse, if you're not going on a run on the beach and you don't have something else going on, and you can watch it, move it up to break even and then just see what it does, move it up every so often. if you're on your way out the door because you're going to Disneyland and you're on your way out the door for a hot date, then you need to protect it, even if it means you miss out on the big move. Because again, with this kind of trading, okay, you don't want to have a loss to the best of your ability. So for example, let's say that we take a total of, I'm going to kind of give out rough numbers here, but 10 trades a week for the next 5 weeks, that's 50 trades. Sounds like a lot, but here, let me explain this to you in breakdown mode. Of those 10 trades, 4 of them closed out with just a couple of pips, okay? Because maybe you were going to the mall and you did not want to risk the huge amount. Let's say one of them was a loss, ouch, that hurt, but we didn't blow our account, and 5 of them were wins. Here's the deal, in 6 weeks, we still hit 6 figures with that math, just to give you an idea. Again, depending on the starting balance and the percentages, but that's literally the breakdown and how kind of to help you see what I see. So worst case scenario, if you have something else going on in life, don't be the person who said, well, I was going on a date and then I didn't want to move my stop loss up because I didn't want to miss the big drop, and then it reversed. Because sometimes those stop losses will break your account, especially if it's at close of business, if it's a high spread pair, if there's a news event, like there's 1,000 variables that are out of our control. So I will repeat, it's 100% up to you. 1,000% it's individual and variable because of the amount of variables in this equation, but it's also 100% recommended and advised that you always, always, always move your stop into profit, because we can't control what happens next. Yes, you might miss the big move and that'll suck, but you can get back in for 10 pips, you can get back in for 10 pips. So we've got options, but just don't be the person who doesn't move your stop loss up, has it reverse, because that stinks. Fair enough?
Okay, yeah, but of course you have to make it move a little bit. You have to make it, I mean, go at least 100 pips in profit or something, right?
Well, we're not going for 100 pip trades for the most part.
I mean 10 pips, I meant, not 100 pips.
Yeah, but 10 pips on GBP is kind of similar to like 2 pips on odd USD. So you see this number right here?
Yeah.
Let's take a look. Watch this.
Oh, sorry.
Okay, so right now it's a little higher. It's 46 pips per day, right? On average, obviously that's just an average. But let's go to one of the higher moving pairs. Okay. Ready? That's 201 pips per day. So if I sat here and I told you and said, hey, as soon as you're 10 pips into profit, you need to move your stop up 2 or 3 pips, right? Just above break even, pretty much enough to cover your spread and your trade, right?
Mm-hmm.
Which is what I would say, and is what I would have taught people a year ago. A year ago, I would have sworn by that and I would have told you I was right. The problem is I was wrong. So now with a little bit more wisdom and understanding, I know that I can't tell you that, and I don't think anybody should, because 10 pips on odd USD is beautiful. Once you're 10 pips in profit on odd USD, oh yeah, baby, move your stop loss up 2 to 3 pips. But on this pair, that's literally, what is that, 300%? It moves 400% as much, right?
Mm-hmm.
Okay, it's 4 times as large in terms of how it moves. It's greater than 4 times as large. So on this pair, you can't have the same level. And now we have 2 extremes, but we have 26 levels in between those 2. So 28 different variables in terms of how it moves, when it moves, how much it moves, what the spread is, and what the average daily range is. So I cannot, and I repeat again, be foolish enough to answer that question. So the answer is very simple. Once you are in profit, depending on what you have going on in your life, your job is to move your stop loss up. If it's a GBP pair, you know that it needs more room. If it's a slower moving pair, you know that it needs less room. So like once you're up a few pips on this, sure, move it into profit. It doesn't wick as much, it doesn't move as hard. But if it's, for instance, a GBP pair or like a Euro NZD, this is not a GBP pair, but also moves kind of crazy. Let's take a look. Euro NZD moves a lot, right? It moves 125 pips-ish a week or a day. So on this pair also, you need to realize that one wick will knock you out. So I cannot give you that answer. I'm not trying to dishonor you or be mean, but that has to be based on what you have going on in your life. So if you have time, and you're not going to be driving your son to therapy, or you don't have anything else going on in your life, then I would suggest you kind of watch it and let's see what it does. If you don't have time, then your first priority one, keeping your purpose in mind, is to protect that trade. That is your first priority. Your second priority is to make money. Okay?
Okay, Jenny, thanks. I think I get the general idea, so appreciate it.
I'm sorry.
No problem. I appreciate it.
Thank you.
All right.
All right, next question.
Jenny, I got one more question for you.
Sir?
Okay, on your worksheet that we're gonna be going by, when it gets over to the double digits over there, when you get up to say like 13.22 or something like that, does that mean $13 or is that $130?
On the lot size?
Yeah.
Oh, so if it says 13.2, it means you're taking, that means you're taking $130 out per pip. Right? Because a 1.0 is $10 per pip.
Right.
So a 13.0 is $130 per pip. Again, that's only based off of USD pairs.
Okay. Okay, I got you. I was wanting to make sure. All right.
So it's a lot. Most brokers won't even let you get over $1,000. Well, it's actually over $10,000 per pip. So yeah, Kumar said it best, guys. Your job first and foremost is to protect your profit. So somebody told me a long time ago, and it kind of rung true with me. Your first job in Forex is to keep your money. Your second job is to create more money, is to make more money. Everyone thinks their first job is to make money, but it's not. Because if you keep putting, thousands of dollars in and you're losing, then it doesn't matter. Your first job is to protect your money. Your second is to make it. And yes, this whole thing right here is going very high risk altogether. But your first job is to protect that trade. If you miss the move on this ugly wick here, this is a perfect example. Perfect example. Let's see. Can you see this wick right here? So let's say we called a buy right here, and we were right, weren't we? We were way right. But it went down, and that knocks you out because it came back and kind of tickled where you got into profit. This is a real life scenario. Okay, you're up some pips, but it came back and it closed down. That's it. So our job is to protect our money. These lot sizes are too large not to protect our money. Okay. Always, always, always.
Hi, Jenny. I have a quick question. I tried to hold it until the end of the session, but have you maybe looked at Pat's new indicator, the daily dots indicator? You know much about it?
Oh yeah, I've had that for a while, as you guys know, because I was silly enough to keep it on a live call. I like it. It's my favorite, but I wasn't allowed to keep using it because it wasn't released yet. That's the truth.
Did you trade mainly off of the 4-hour time frame or daily time frame on it, and did it repaint any on you?
Yes, first off, all of those support lines do repaint, but it's not a bad thing in the way you're thinking. So you see this setup right here. My Zoom's acting a little funny today. I don't know why, but this setup right here, okay, it's got a lot more noise on it than I typically had. Now those arrows showed up. Huh, that's weird. But okay, this setup with very minimal arrows. I had the little arrow and the yellow arrow. I had no big arrow on this. Granted, this is a little bit different because I was playing with some stuff prior to the call. All I was doing was using those exact daily dots with the star and waiting for the 8 and 18 crossover on the 4-hour or the 1 hour. For a while, I was having a ton of success on the 1 hour, but the truth is I was moving across country. Children were getting out of school, packing up the house, 1,000 emotions running wild, leaving everything and everyone I've ever known behind, tons of lunches and all that stuff. So I got really busy and I went to the 4-hour. And I know it's a lot less stress, but the stop losses are huge and they're almost always as a pullback. But it's pretty accurate. It's very accurate. I'm surprised at how accurate it is. So using just these dots along with some confirmations, especially when you get an alert, like I've told anybody else who jumps on my live calls, we want to have 6 of them. 6 of them means one day has closed. At bare minimum, you want 4. And we've discussed these daily dots in lengths with a few other people I collaborate with in the group. And I know these things sound really simple and probably tedious and maybe even stupid, but they're pretty awesome. So the way that dashboard is set up, it's a lot of noise. It's a lot of information, but it's built that way on purpose. So like the person who like myself, at this point, I trade mostly off the dots, even more so than the arrows. I just found them super awesome because this little arrow doesn't repaint. And obviously,
Yeah, I do the dots as well. I use those a lot as well.
I mean, and the 4 hour, so if you do, you can get alerts on that based off of 4 hour dots appearing. You can get alerts based off of 1 hour, or even for the scalpers. Like you guys can get good. At first, it's going to be overwhelming and it's frustrating and it's hard. But once you get into the rhythm of things, for instance, if you're a scalper, you can set those daily dots up to give you 1 hour dots only, and then only have them turned on during the time you're actively working. So you're not like digging for trades, rather you're getting signals. So for some of us who are like swing traders or like the 1 hour or 4 hour, you can have those dots set at 4 hour or daily, and then you get these signals. It's a little bit more noise because it's harder to pin down when they come on those higher time frames, but same concept. You can literally shut it off and then only get the ones that are active during the time that you're trading, and then you ignore all else. Okay, and it's actually, if you get good at it and your management and your kind of scheduling, it's pretty awesome. For anybody who's a now and later trader, get the alerts for the triple arrows on the 15-minute chart in conjunction with the 4 hour dots, and then pretty much you have a confirmed trade. So when you get that signal, now you're good to go. Now, learning it, managing it, and setting it up is going to be a pain. It's going to be tedious for many people. It's going to be a whole bunch of overwhelming stuff. But once you get past that learning curve, you're going to be pretty amazed at, wow, this works pretty well. Because you're going to get a possibility of anywhere from 10, 20, 30 signals a day, depending on which strategy you're using it for. And then only take the highest quality ones. You only need a few trades that go 10, 20, 30 pips. You don't need 1,000. So.
Right, I appreciate that.
You're welcome. And you can compound your own account. So like you can take a separate account aside from what we're doing in the 6-figure challenge, and same concept, and just compound them based off of your strategy. You're looking for hopefully just 5 to 10 trades a week. And you guys know the 5 to 10 trades a week is going to equal you six figures. Let's just to keep it at that number, 6 figures. So, but anyways, okay, next question.
Hey Jenny, what days would Pat be giving live trades on, and you'll be on Tuesdays and Thursdays, right?
Yeah, so I'm going to go live on Tuesday and Thursday morning. I'm going to still have my live on Tuesday night, although that one will be more of a training than a trading. Although if I see a signal, I'm definitely going to take it. That would need to be a 4 hour signal because, as you guys know, London reverses. I don't typically take a whole bunch of trades in the Asian session because I don't want to be worried as I go to bed, especially with that lot size. I don't want to be freaking out. I mean, for a swing trade, it's fine, but for like something like this, you don't want to like go to bed thinking, so if I wake up, my whole life is over, you know? So that's me. Elvis, I'm pretty sure, is going to be dropping signals in his own way. I don't know much about his trading style. From my understanding, he's very accurate. I don't know how or why. It's, you know, we know how to stay in our own lane, and as you advance in life, we learn that. So he is a rock star in his own right. I just don't know what right that is. So my understanding is it will be not his calls will be Monday night, and then he'll be dropping signals in the signal channel. Same thing with Pat. He stays in his own lane super well too. My understanding is when he gives signals, he goes for 2 to 3 a week because he holds his, kind of like how I typically trade. I hold mine. So most of my super high accuracy trades have been swing trades, but that stop loss is huge. So my understanding is, in his own way, in his own right, he is a rock star. He's a great trader. He's going to be doing something along the lines of 2 to 3 signals a week dropped in the signals group. And he is in the process of moving his family. So the first few months are going to be a little bit tense. I believe he's going to be going live on Wednesday and Thursday. Now, I may be wrong, so don't quote me on that. I don't want to misinform you guys because we talked about it earlier, but it's changed a whole bunch of times since we've talked about it, every time we've talked about it. So I don't really know. I'm pretty sure Wednesdays and Thursdays he'll be doing either live trading for the team or live trades. I don't know which, so we'll confirm that with him.
Okay.
Okay.
All right, thank you.
Sorry, yeah, I don't know that part, but that's kind of how the setup will be. All right, next question.
Jenny, I have a question. So we'll be taking the trades only on the live sessions, or are there any possibilities of you taking the sessions after that as well, outside the live session?
Yeah, so what I told Pat, that's a really good question too, is I might just say, hey, I've got some time. It's Wednesday afternoon or it's Thursday evening and I want to go live with you guys. So we'll plop on some music and we'll talk and we'll hang out because maybe I see a setup. So I'm not going to commit to that. And if I had it my way, I would just do that. I would just drop a link and say, whoever is available, come on in. That would be my preference in terms of how I would do it. I would go live every morning in New York, pretty much Tuesday through Friday. If it was just like my way, this is what I would do. I would go live every New York morning, and then every now and then I'll drop a link and say, hey, whoever's not busy, come hang out. Let's look at some charts, right? That's the kind of approach I would have. So, but we needed to schedule that people knew what they were getting and knew what they were, what to expect. So having said that, Tuesdays and Thursdays, I will be going live and taking trades, depending on what we see. If I see another trade, my hope is that we can either drop a video on what I saw or jump on and say, hey, whoever's on right now or whoever's available, click into the Zoom real quick. We're going to be analyzing this trade. I'm about to drop a signal. This way you guys can see. So for instance, if I saw this trade right here, okay, we're on the 1 hour chart. So let's just use this as an example. We have my 8 and 18 crossover. I kind of love that. And as we're coming over here, we have this fractal. Let's say it broke that. It's not quite below the 50, which I'm not in love with. So we scroll down, and this is now on my watch list. I don't want to take a trade when my momentum line is below the 25. I really avoid that because I realize it's one of those things that keeps me out of bad trades, right? So I want to keep my eye on this. Either way, I come back to my charts a little later after the call we had in the morning, and maybe our other trade already closed out in profit or we got knocked out by moving our stop loss up. Whatever the case was, let's say I see this, where we now have broken below that fractal, where we've officially broken below the 50, and our momentum is coming up, right, over here. My computer's kind of lagging. And of course, we have our MACD aiming down. We broke below the 0 line, tons of currency strength, which is now above the 40, above the 60 and below the 40. I'm kind of big on that nice wide open spread there. That's beautiful to me. And I say, okay, we're going to be taking this trade, okay, for 40 pips. Okay, and that's all we're going for because we need something that's going to have a healthy risk to reward ratio. I mean, and we may or may not get the whole 40. As you guys can see, if you stayed in this trade, you could get a lot more if you happen to be up, available, and around. But if not, you want to be able to manage that trade. Any trade that I send out, you guys are welcome to stay in that trade until it closes above or below the 8 moving average. So, for example, well, that's a bad entry because we would have been entering in here. Okay. So for example, this specific trade would have went anywhere from 70 to 90 pips. But when this green candle closed above this gold line, the 8 moving average, that's when you could exit the trade. So you guys will know my trading style, which is, hey, I gave you a signal. You're welcome to stay in that signal for just the typical 40 pips is your option number 1. Option number 2 is, let's say we had this signal, let's say we got in kind of late. Okay, you can stay in this trade all the way until price closes above the 8. So as you see, we kind of, I guess this right here, this would have knocked you out. But either way, this is the kind of thing I'm talking about. Like you have choices, but you have to take ownership of your own choices. That's my only requirement is, look, you guys are entitled to your own choices, but just own them when you make them. So this is a simple example. We called this trade, you stayed in until it closed above the 8. This is obviously a perfect example, so we're going to skip this one. Because that one obviously only happens in the past. I'm just joking. Sorry. I'm not too funny. Okay, so this trade, we took it. We definitely got our pips out of it. But we can stay in until it closes above the 8. So if, for instance, Elvis or Pat don't send out a signal the next day, and you happen to have this one you're still holding from me, then hold it and stay in it. Just keep moving your stop loss up a few pips every time you get a chance and let it run. And then the next morning, move it up a little bit more and let it run until you see that it closes above the 8. You're welcome to hold this trade until either A, you get another signal, which means you can't be in lots of signals at the same time, right? or B, we close above the 8. So that's kind of the rules that I will give you guys in terms of how to take and manage a trade. So when I give you a signal, you guys can hold it for the take profit. You guys are allowed to stay in it as long as price stays below the 8 moving average or for a sell, or above the 8 moving average for a buy. And for that rule, you're going to be using the 1 hour chart. So, and the same thing actually with whatever Pat's doing and whatever Elvis is doing, you could technically apply that same rules to their signal too. That so long as price stays on the right side of the 50, or not the 50, I'm sorry, the 8, stay in his buy or stay in his sell up until it closes on the wrong side of the 8 moving average. Up until that either happens, or until you get another signal that again matches all your rules, and now you're going to take that signal. Does that make sense? This way you can maximize each move. Does that make sense?
Yes, Jenny, thank you.
You're welcome. All right, next question. Next question, anybody at all?
You hear me?
Mm-hmm.
Hi, Jenny. I have a question. During the six-figure challenge, are we going to be like comparing results or posting results some way, or letting you know when we hit certain, certain milestones? Like
That
if
would
we,
make me
for
really
example, were to get
happy.
200,000.
I'm sorry?
Like if we were to get to six figures or whatever.
I pray you guys withdraw the 6 figures. I really, really do. Okay, like with everything in me, I do. Because unless you're already a $250,000 income earner, I just think that there's something psychologically difficult that hits certain levels, and I think it has to do with your previous expectation. Like trying to teach, and this is not to be. Anyways, to answer your question, yes, you guys can post results and say this, contest is awesome. Thanks so much. We're doing great. You guys, I'm sure Pat would love that in terms of his group or on the Facebook page. Obviously, you're going to want to post closed trades, not open ones, because that's like giving the signals away, right?
Oh, right.
Yeah, and that would make me feel like $1 million. I mean, to know that it's making a difference and it's working, because for every person that's having success with the signals, there's probably going to be somebody who misunderstood, placed a buy instead of a sell, didn't manage it correctly. So, that would definitely encourage the group and encourage me. I'm sure I would encourage Pat, because Pat has done signals before, just so you guys know, and his signals were good. Like they were really good. So I think that he had a couple rough weeks out of 5.5, 6 months and I don't want to be inaccurate, but he had one honestly losing week, and then 2 weeks where he lost some trades but still broke even, and people didn't handle that well. So even when he posted signals that worked, they worked. Some people just don't know how to manage. They don't know how to enter, exit, protect, and just there's so much more to it. So I think it would probably mean the world if you can post that, hey, these signals are working for somebody. They are making a difference, and I think it'll encourage those who maybe aren't getting it right to look in the mirror versus looking to blame. And I think it'll encourage people who maybe haven't enrolled yet in the monthly membership that, hey, I need to be a part of it. I think it'll make the people who are running the contest feel like $1 million. So I think that it's a really good idea to answer your question. So does that answer your question?
Yes, it does. I did have one more question for you.
Go ahead.
I do follow the triple arrows and stuff, but I also kind of have my own thing that seems to work, and it circles, or I guess it kind of entails overbought and oversold.
Mm-hmm.
But I hear a lot of things online from credible sources, and I've seen a lot of videos where they think that overbought and oversold doesn't exist in the Forex market.
It doesn't. Mm-hmm. Okay, time out. How long have you been trading?
I'm sorry, say that again?
How long have you been trading?
14 years.
Wow. Okay, well,
I started in April 2005. I took my first.
I can't argue with you then, so that's not fair. Here's what I can tell you. I mean, if that works for you, great for you. I just know that for most of us, it's simply, and here's the deal, the concept is that there makes no financial and reasonable sense. And here, let me show you why. Ready? So on the smaller time frames, in theory, of course, hindsight's always 20/20, but let's see if we can't give you a real life answer. Ready? Check out this chart. It's the perfect example. Ready? So this chart has literally been doing what for how many years?
It's in an uptrend.
Well, clearly, I mean anybody can see that. Clearly it's in an uptrend. That's a no-brainer, right? But here's the thing. This has been overbought the entire time. This has not had even a 31.2 retracement, 31.8 retracement, sorry, 61.2. It hasn't happened. So I can keep making it as small as my chart will let me to prove a point, but the truth is I don't need to prove a point. So like this has happened without even the smallest amount of the whole Fibonacci, numbers, rules, levels of a retracement. And I bring up this to prove a point. The problem with overbought, oversold trading is technically it can keep going, but when you're trading reversals, when you're trading reversals and what do you say, counter trend trading, reversals, anti-trend trading, all those fancy words, right? That's the risk you're running anyways. It's the same thing with the big arrows. Since you're technically trading the reversal, you need to be mentally aware of that. So the way I trade, and I think is why I'm accurate, is because I stopped trading reversals. Because me, like many people who were in IML, we were taught that, hey, once RSI gets to 70, it's gonna have to turn around for a few pips, because I use that IML web analyzer, right? And most of the time it did turn around for like 2 pips. So technically it was right, but it wasn't even enough of a turnaround to necessarily cover the spread. Then we're taught, hey, if it gets to 80, then it's definitely gonna turn around. Or hey, if stochastic's at 90, then that's a go. It's gotta sell. But the thing is, it can stay at 90 and then keep going up. Sure, it'll have a pullback, but whether or not so if you got in here for the pullback, it went against you and hit your stop loss and still didn't even pull back enough at all. So like, if you are good with that, then good for you. I won't teach that to people. I teach them that the RSI is literally garbage if you're going to use it for overbought, oversold. I think you should use it as a golden zone, just like the MACD. Everyone wants to trust here. This is where your money is at. Everyone wants the fast entry, but this is where your money is at. Same thing with the RSI. Everyone wants to trust the whole 70 peak, and even Irving himself, like he was doing really well, with all due respect. He was doing really well with the method in terms of scalping, but not well enough to compound effectively. It wasn't until he added the whole, hey, wait a minute, I'm not going to trust this. I'm going to go with the trend. I'm going to go with what's really happening. Because sure, I can get a few pips here, but why would I take this unsafe few pips when I can take the really safe more pips? So I don't know, like I don't want to debate that, and I'm sure for some it works, but I mean, economically speaking, there's no such thing as overbought, oversold, or houses would still be $5,000 like they were 500 years ago, right? It's not the case. I mean, there's so many economic reasons why that whole theory is inaccurate on every level. So,
Okay.
but that, sorry, I'm really sorry.
No, that's okay.
I mean, that's just, if it works, for you, great, but I think it's more of a scalping thing if you're going for like 2 pips on a no spread broker.
So even if you were to, come down to the 1 hour, and I'm not talking about RSI, because I agree with you. I think RSI for overbought, oversold is terrible.
What do you like, real quick? What do you like for overbought, oversold?
What do I like?
Mm-hmm.
I think I use a combination of stochastic, MACD, and I don't know. That whole market makers method I think is very interesting, and I've had some good results with it over the years. But when you combine it with triple arrows, it's pretty deadly, pretty good.
Okay, so the market maker and triple arrows, got it, right? Is that what you said, the market maker and triple arrows?
Yeah.
Okay. Like, if that works for you, great. Like, I don't, here's the thing, even with like any clients I coach, I don't want it to be about me. I want it to be about you. Like if that works for you and your brain and your eyes understand that all, that's stinking fantastic. But for me, like I don't recommend that. I don't teach that. I don't necessarily see eye to eye. And actually, I think I'm going to end that conversation, answer somebody who messaged me privately to answer a question about the market makers. Again, I'm not a guru, guys, but I will say that having a hidden stop loss and take profit is kind of important. Yes, I have a tool that does it. Yes, I think it works. And yes, I think it matters. Do I believe that the market makers are just going to find out exactly what we're doing once that many accounts are growing that quickly? To an extent, the answer is yes, but we are very, very, very small fish in a very, very big pond. So even if all of our accounts did hit 7 figures at the same time, we are still a very, 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 very small fish in a very, very, very big pond. So, like, do I think it's going to be ultimately the make or break is whether or not the market makers figure out how we're taking trades? No, I don't. I do think that discretion is mandatory when you're evolving and you're growing your account or as a person and in many other areas of life. So having said that, like being mindful that everyone trades a little differently, to try to track down the algorithm of how they track our trades is it's kind of like a fool's errand. So I don't really mind it to answer that person who messaged me and didn't want to speak up. And here we can talk like on the phone or on a Zoom if you want to talk more about that. So, but I don't feel like it's the make or break end all be all. So, but anyways, next question. I'm gonna go to the chat real quick. I'm not gonna move this. Send the link to your. If you don't have the link to my AAFX, please message me on Telegram. Please do not take the bonus on AAFX or any other broker, because listen, you're already trading with leveraged money. When you take the bonus, you're pretty much, I explained it a while ago on a call, but you're pretty much you're quadrupling your risk. So basically you're trading with more borrowed money. You're trading higher leverage with more borrowed money. So although your account says you have $500 in there, but you're still trading it like it's only $100 because that's like ghost money. That's I understand it. I definitely am not the best to explain this, but it's like ghost money. So technically you have a bonus of, let's say, $250, and you're trading a $250 account. So it looks like you're trading 500. So your margin level of percentage available is that of a $500 account. But here's the thing. Once you hit a certain level of equity or a drawdown and they start taking back the bonus, now you blow your account. Like, I don't know how to say it nice, but it's a really bad idea, especially for high risk. Really, really bad. Please don't take that bonus. It's not worth it. You can do it on your very low risk account. I mean, they're not the end of the world. You'll understand once you trade with an account with a bonus, and I've done it a couple of times. I was silly and I was wrong. You'll know why. It's very difficult to explain, but you're already trading with leveraged money, which means part of it is funded. When you add debt to that funded money, which is ghost money, it's not even really there, you're just quadrupling your list of problems. It is not a good scenario. So, all right, any other questions or comments? I don't want this video to go too long. I want it to be kind of short and watchable for anybody who's looking at the challenge or how to do it. Tomorrow night, we're going to go over the spreadsheet, how to plug and play. We will post updated, accurate versions in the notification channel. We will pin them in the new groups and all that other good stuff. But I want you guys to totally understand my FX book, the calculator. I want you guys to totally understand Stinio, the app. So we're going to go over that and totally understand that worksheet. So you guys know how to compound effectively and what you're looking for. So does that answer all of your guys' questions for tonight?
Yeah, I had a question on millionaire spreadsheet. So you said it'll be discussed tomorrow. So I think it's all good. Thank you.
Thank you, Kumar. Anybody else? It's not about specifically this spreadsheet, calculating your risk to reward, your stop loss, because we're going to go over that level of stuff on tomorrow night's call, because I'm trying to keep it in an easy enough to follow format so people who are just now joining can watch these two calls and kind of know exactly what's going on. So
Hey, Jenny.
Yes, how's it going?
Hey, good. This is Ian.
Hey, Ian, how are you?
So I'm doing well. Thank you very, very much. How are you?
Fantastic.
Awesome. So I'm just thinking that when we're done with this six-figure challenge, we ought to have like a super easy six-figure challenge, like get together weekend down in Miami South Beach or something.
No, me. Hello. I know. Okay, listen. There's a lot of like, I have some dead serious about that, guys. If I can help you guys get to six figures, I think that we owe it to each other to go and hang out in real life, talk about what's his name, Dorian's new girl. I'm gonna want to talk to her. No, but just talk about life and get to know each other. Maybe take a cruise or even just they have tons of amazing resorts, and even if it's not here, I would go somewhere else. I would definitely consider going somewhere else. Florida happens to be a really nice place, and it seems to be super nice in December and January when the rest of the country is very, very cold. So I'm 1,000% on board with the idea of, okay, so we hit six figures. We get to that level. We have a weekend where we come together and we get to know each other. I'm sure we are very different than we all think, you know, and that's good. It's awesome to be ourselves and to love ourselves and just like hang out, and like that would be so amazing. I'm 1,000% on board with that. We'll do at least one charity event that weekend. We might have some wine, might do some swimming, go on a cruise. That'd be awesome.
Yeah, sounds good to me, man. Sounds good to me. I just happen to know Florida. You know, I've got friends down there who've posted, you know, pictures on Christmas Day at the beach. You know, like, you know, with you know, Santa Claus hats on. So I'm jealous. So yeah, I'm definitely down for Florida in January. But hey, I'm down for anything. I just think after something like this, you know, if you could take $200 or whatever you start with and turn into six figures, that's certainly something to celebrate. And I think it would be awesome to celebrate, you know, at least a little bit of that with this, you know, this awesome family that we're creating here.
Honestly, I think that would build a connection. I think that is like, I want to do good work, guys. I want to help you guys succeed. I can't promise we're not going to blow an account or two. I can promise that I will stick with you long enough to hit six figures. But I think that that's what's going to be the connecting bonding experience, is us being able to take us in our real lives. These internet, most of us work from home, and that can be hard sometimes. So to go out there and to actually meet each other, hang out, give each other, you know, a handshake, and like maybe make a difference, do something for the community, have a live like trading even if we wanted to, and then just like chill on the beach, go on a cruise, whatever we wanted. I don't care if it's Disneyland, I'm all in. So I'm all in.
So am I.
All right, cool. I'll tell you guys who, the first one of you guys who hits six figures, okay, I will take a mini vacation somewhere for a couple of days. So I'm all about traveling. I need more stamps on my passport. So
Sounds good. Well, I'm in. You guys can count me in for sure.
awesome. Thank you, Ian.
I love the positivity. Great one. Thanks, Ian.
Thanks, Jenny.
You got it, brother. You got it.
All right, guys. Any other questions, comments? Anybody at all? Who wants to go on a
Jenny.
cruise? Hey, who's
Jenny,
this?
hey, Lawrence, how you doing?
Wonderful, and you?
All right. Got a quick question, a couple of questions. Number one, what are the rules for entry into the challenge? And then number two, let's say you call a trade, for example. Will you say, well, these are the pips I'm shooting for, or it's up to us to determine the pips on a trade call out?
Okay, so those are really good questions. Pat and I have discussed this. We've talked about it off and on. Again, this is his group, so it's going to be ran a little differently than necessarily I would do it, and that's not a bad thing. It's a good thing. So getting past all of that, here's the deal. I want to say we're going for a consistent number of pips, but like we discussed earlier, every one of these pairs trades differently. So I will not be foolish enough to say that. Not to mention, since it's not just me calling signals, I will again not be foolish enough to say that. So what we're going to do is we're going to have a take profit, a stop loss, and an entry. So when I go over this worksheet with you guys tomorrow night, you will understand more clearly. But what my plan to do is when we plug a number into that worksheet, we're going to plug the number of 40 in terms of what our take profit is into that worksheet, okay? But I'm going to show you guys how to use different take profits, and then of course different stop losses on different pairs. It's not going to equal dollar for dollar because, as you know, not every pair is worth the same. but the rules are going to be very simple. If we call a trade and you don't, it doesn't match your rules, whatever your rules are based off of your chart, you are not supposed to take that signal, okay? So Pat will have a signals group. He'll have several live tradings. He has a fancy tool. Were you on his call this morning?
You said what?
Were you on his call this morning?
No, I'm going to listen tonight. I'm going to listen to on call tonight.
All right, gotcha. Well, then you'll kind of hear it all. He's got a fancy, cool tool. It's very in-depth. It's very well done. He has spent months perfecting it. Like, you don't even know how many times he has sent that back to the developer. Again, another $150 pop, $150 pop, $300 to adjust it. Like, you have no idea how much that tool has evolved to be exactly what we wanted it to be. So it's a really nice tool. It is going to be a private signals channel, and you can watch his call this morning. So, well, from this morning.
I'll watch it. No problem. I'll watch it.
All right, awesome.
All right. Thank you. Appreciate it.
You're welcome. Anybody else?
Hi, Jenny. I have a question again. Sorry.
No, you're okay. Go ahead.
I know that I know about your trading style. Like, you may send a Zoom link for us to join whenever you feel there's a trade. But how do we know about Elvis? Will he do the same, or?
So I don't want to speak for them. Again, like, we've all gotten really good at staying in our own lanes. My understanding is he will be trading on Monday, or he will be going live on Monday nights and dropping signals in the signals group. That is the extent of everything I know. I don't know anything else. So, like, I don't want to speak out of turn. Pat is really working on it. He was trying to get this launched, and that's all I know.
All right. Thanks, Jenny.
You are welcome. All right, any other questions?
Yes, Jenny.
Yes, sir.
My name is Nivard Malcolm. I've been with the group for several months, but I haven't done any live trades, just a lot of demo work.
Okay.
Do I have enough time to open an account and be part of the six-figure challenge?
Yes.
Okay. I'm in the USA. Do you have any competition as far as the brokers?
Yeah, you can message me on Telegram. I have 3 that I use. They are not perfect by any means, but I like Hugo's Way because they're the most consistent and they have the most pairs to trade. And honestly, they have great customer service and awesome withdrawal and deposit options. I like AAFX because they have high leverage and I've never had an issue withdrawing, and they have high spreads, but they also have no swap fees and no commissions. And I like CoinEx because they have really tiny spreads, but otherwise they're just kind of mediocre. I mean, they have small spreads, but they're not like small enough to justify everything else. So my favorite would be Hugo's Way and AAFX. And you can message me, I'll send you a link. I do get like a few cents. Like I said earlier, I got $12 out of 200 referrals in 2 months on AAFX. So it's not much, guys. And for anybody who thinks it's like a whole bunch, trust me, it's not. Not at all. So.
Okay, thank you very much.
You are welcome. And if you use a referral link from me or anybody else, yes, you get a small discount in your spread or your swap or whatever. So.
Okay, sounds good.
Yes, sir.
Thank you. Yes.
Any other questions, comments? Peekaboo. Going once. Okay, don't be shy, because if you have a question, I want to answer it.
Hi, Jenny.
Hey, Lisa, how's it going?
Good. How are you? I have a question.
Yes,
how many brokers do you suggest we have in order to be successful with this challenge? Can we have just one good broker, or should we have more than one?
Oh, you can have one good. Well, wait a minute. You can have one, and you can have a few accounts with them. But again, guys, I've worked with a broker I worked with a couple brokers for like a year and a half, 2 years, and then things all went crazy. So in all fairness, I would totally recommend you don't put all of your eggs in one basket. So maybe have an account set up with like AAFX and one with Hugo's way, just in terms of who you are as a person, if you're just starting out, one is enough. But just don't put all your eggs in one basket. So you can even have two accounts with the same broker. For instance, I have several accounts with AAFX because they have the highest leverage, and I can just play with them. And then again, I have several accounts with Hugo's Way, and then I have 2 accounts with CoinX. So, but if you're not at that level yet to be managing multiple accounts and don't have a system in place for that, then one is enough. Okay.
Okay. So one account would be enough for me to be a part of the 6-figure challenge, correct?
Yeah, you guys only need one account with
Just
whatever
one account.
Yes, yes.
Because I'm new to trading. I just bought the system maybe 2 weeks ago. So I'm new to trading. I guess having multiple accounts would kind of confuse me.
It's very confusing. It still messes me up if you want the truth. So I still make like the stupid mistakes, if I'm being honest, like the not the wise ones, the dumb ones. Because when you're managing that many accounts, it gets kind of tedious. So, I mean, are you new enough that like you understand moving a stop loss, taking profit, entering a trade?
I do. And I'm learning. I'm the type of person it's trial and error with me. I have to dive in order to learn the system. So I had a couple good trades this week, which is really good. So I'm learning the system, and the system is very easy to learn. So with this group and the 6-figure challenge and with your training and all the others training, I think I'll be okay. I just want to make sure I have enough accounts in order to be a part of the challenge, because I don't want you to send out a signal and I can't get into it because I don't have enough in my account. I don't have enough in my account or don't have enough accounts. That's what I'm afraid of.
Gotcha. No, but like I said at the beginning of the call, just in case you missed it, guys, this is a high-risk challenge. So on our everyday trading, we're going to tell you to take it smart. We're going to say use good risk management. The purpose of this challenge is not take it smart. The purpose of this challenge is let's go big or let's go home kind of. We might blow an account, but we're going to hit 6 figures. So I want the people on this call to understand that again, and I'm going to say it again. The purpose of this trading is not the same as we would teach you in the regular group. What we would teach you in the regular group is we're going to use good choices. You know, what we would teach our children, great choices and happy and all that other stuff. This is we're in it to win it, and we might go down on the way. So this is ride or die style, just so you're aware of that, okay?
I understand.
Okay.
I understand. And I'm ready. Thank you so much, Jenny. You have a great one.
You are welcome, Lisa. Thank you for jumping on, and way to go on your week. I mean, that's pretty awesome. A couple weeks in and you're already winning.
Oh, yeah. Thanks, Jenny.
You are welcome.
Hey, Jenny, this is Stanley.
Hey, Stanley, how are you?
I'm fantastic, and I am ready to jump in.
Okay, good. Let's go.
So it's coming at the right time. So thank you.
I'm so honored and blessed, you guys. This is going to be exciting. Hopefully not too much pressure, and we can just have some fun. So whenever Pat posts everything he's got to post, again, it's his group. I don't really know any of that stuff, but he's going to get a link out soon, and it's all going to be good. So make sure you guys are all set up this weekend to do what we need to do. It is Labor Day next week, so we're going to be mindful of USD pairs, but I think that good things are coming. So let's be ready to kind of trade and follow some good rules. And I'm super excited. So tomorrow night we'll go over risk to reward. We're going to go over lot sizes for regular trading and for the challenge, just so you guys are super clear and understand how to use those apps, those calculators, and that worksheet. Okay?
Perfect.
All right, Kumar. Well, I'm not going to ask if anybody has any extra questions because I already asked that like 500 times. So I'm not asking that again. But I know it's your favorite. So yeah, what do I like about Hugo's Way? You can message me, Greg. They're my favorite. They're just great to work with. They don't have like the best spreads or the best leverage or the best really of anything, but like they're the best in the middle. They've never let me down if there was a problem. They've never manipulated price. They have great customer service. They have great, and actually with them, when I have a referral with Hugo's Way, once you've traded so many lots, I can actually start paying you like per trade. Like after you hit so many lots, I don't know a lot about it yet because only like 3 people have hit that many lots who's an affiliate of mine, but just so you know. I wish you'd let you name your accounts. Brent, that is the best thing ever. I really wish the same thing. And that's all I can think of. I will change my Zoom to the next up paid for package. And other than that, I'm no more looking at the chats. I hope you guys have a fantastic night. have some fun, do something cool, and take care, and God bless.
Good night,
Hey,
Jenny.
thank you, Jenny. God bless. And thank you.
God bless, Jenny. Thank you.
Thank you.
Thank you, Jenny. See you.
Good
Bye.
night, Jenny.
Bye, everyone.
Good night, Jenny.